Hello, this is Japanese Economic Review Channel. Today, we will examine the March 2026 indexes of business conditions to assess Japan's economic health. The key takeaway is that Japan continues a synchronized expansion, strongly driven by exports. While leading indicators forecast robust near-term momentum, we must also navigate pockets of consumer caution. Let's briefly review our analytical framework. We use the composite index CI to measure the economy's magnitude and tempo, and the diffusion index DI for its breadth. These are divided into leading indicators for forecasting, coincident indicators for the present, and lagging indicators for post-confirmation. Looking at the March 2026 headline numbers, all three major indices posted month-over-month gains. Notably, the leading CI jumped by an impressive 1.3 points to 114.5. The coincident and lagging CIs also rose. This synchronized upward movement strongly suggests that the current expansion cycle has solid momentum. Focusing on the present state, the coincident CI sits at a robust 116.5. Crucially, its 3-month and 7-month moving averages remain strictly positive, gaining 0.70 and 0.37 points respectively. This consistency confirms that the current economic expansion is deeply rooted and not a single-month statistical anomaly. However, the present expansion is a macro tug-of-war. The positive push is heavily driven by a 3.0% surge in export volumes and strong retail sales. Conversely, we face headwinds from a 4.4% drop in durable consumer goods shipments. This highlights an export-led growth that is masking some domestic consumer weakness. Turning to the near future, the leading CI shows surging momentum, jumping to 114.5. The 3-month moving average increased by 1.36 points. This sustained and accelerating upward trajectory in our forward-looking metrics suggests a highly robust outlook for the Japanese economy in the coming months. What is driving this future growth? We see a divergence: corporate strength versus consumer caution. Tailwinds are fueled by a massive 30.4% jump in real machinery orders. However, plummeting consumer confidence acts as a significant drag, pulling the index down by 0.56 points. This divergence is a critical risk factor. Let's confirm this with the lagging index, standing at 113.4. Both its moving averages are positive. The lagging CI is tracking smoothly behind the coincident data, just as macroeconomic theory dictates. This steady trailing confirmation validates that the broader expansionary cycle is structurally sound. The specific drivers of the lagging CI tell a story of realized growth. A significant 7.3% surge in corporate tax revenues reflects robust past profitability. Additionally, rising consumer price indices confirm that inflationary and income pressures are structurally embedding into the economy following the expansion. Next, we look at the diffusion index to understand the breadth of this expansion. The leading DI is at 77.8% and the coincident DI at 75.0%, both well above the 50% threshold. This high participation rate indicates that economic growth is widespread. We are witnessing a systemic, multi-sector recovery. Our sector heat map visualizes this dynamic. Expanding hotspots are clustered in industrial, trade, and commercial sectors, including exports and corporate hiring. In contrast, contraction zones are concentrated in consumer sentiment and durable goods. The industrial engine is firing on all cylinders, offsetting consumer hesitation. Placing today's 116.5 coincident CI into historical context, we observe 4 decades of economic cycles. Current index levels signify a complete and resilient recovery from the 2020 pandemic trough. We are charting new territory that rivals the peaks of the pre-2008 and 2018 expansionary cycles. Briefly on our methodology, CI reliability is built on a rigorous 5-step engine. We calculate symmetric percent changes across 30 metrics, filter extreme noise using a 2.15 standard deviation threshold, and synthesize the amplitude to capture true macroeconomic tempo. This ensures our signals are clear and actionable. In conclusion, we have 3 key takeaways. First, the present magnitude is solid, driven by exports. Second, the future trajectory is bright but requires caution due to plummeting consumer confidence. Finally, the breadth of expansion is massive, confirming a systemic, multi-sector macroeconomic recovery. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.